inside of the 5-minute bearish breaker, right here on this candle at 307, what's occurring? The market's trading up into the 5-minute bearish breaker, which is shaded in this shaded area here. It's trading to the low of the inversion fair value gap that you're going to draw from the 5-minute chart. It trades up to it here, and this down close candle right there. But ICT, look, it has that big wick. I don't give a shit. That wick right there has no bearing on what it is I'm talking about. The down close, I'm sorry, the up close rather. I said that incorrectly, sorry. The up close candle is a bearish order block. So that up close candle, when it's trading to it here, there's two things going on the 1-minute chart right there. Two things are occurring. It's trading to the breaker and inversion fair value gap on the 5-minute time frame. And on the 1-minute chart, it's trading up into a bearish order block. So when you see folks out there saying order blocks are just engulfing candles, that's horseshit too. It's nothing to do with engulfing anything. When the price is in a sell side delivery, okay, in other words, at 3 o'clock, the price starts its run and the macro begins seeking sell side, which is running here, and then aiming for lower sell side liquidity, which is below old lows or singular low. Every single time the market creates a up close candle in that sell side delivery price run, in other words, you're calling it a trending market. This is not a trending market. This is just a market that's declining. So that's why I don't use those terms, trending, because price swings are not trends. They're not to me. They're price runs. So if I'm expecting and anticipating price running to lower targets into a discount, either for the purposes of going to a fair value gap that's lower than market price, or to a low or relative equal lows for sell side liquidity, either one of those scenarios will provide me the context to anticipate lower prices. While I'm watching price, if I see something like this where we open, we trade down, and we rally up like this, if I'm short, I'm not freaking out over that. I want to see how we see the first up close candle when sell side begins its delivery. Because once we get our price run here at 3 o'clock and we snap below that candle that created it, what kind of candle is that? Is it up close or down close? Up close. So when we break below that, I want to see when price starts to run, we're in an area where I anticipate what's the inversion fair value gap expected to do? Create a resistance factor in price. It should accumulate more shorts. It should offer smart money the opportunity to get in and add, or like you see me many times do, pyramid more short positions in an existing short position. Our next up close candle is this one. Does it respect it? I don't know. What does it do on this one? Does it bump the bottom of it and run lower? The next candle? Yes.